The number one way to lower your car insurance is not a discount code. It is the one thing your insurer's quietly counting on you never to do. Leave. The average driver who switches saves about $461 a year. Same car, same driver, same coverage. Meet Maria. She pays $2,926 a year across 2 cars. Her credit is fair but climbing, and she is tired of that bill creeping up every renewal. So of these 13 levers, which ones actually move real money for someone like her? Let us rank them. One quick disclaimer. This is decision math, not financial or insurance advice, and costs vary by state, income, and year. Check with a licensed agent before you act. The average American now pays $2,926 a year for full coverage. Every savings list gives you the same 13 tips in no order, so you cannot tell the levers that move real money from the ones that move pocket change. We ranked all 13 by actual average dollars saved on current 2026 data, and we will show every source. We will also tell you which 4 barely do anything, no matter what the ads say. Quick honesty note before we start. Some of these only work if your situation fits. A teen driver discount is worthless if you have no teen. We will flag that every time. Let us count up. We are starting at the bottom, number 13, with the ones every listicle pads its count with. An anti-theft device gets you 5 to 25% off, but only off the comprehensive slice of your bill, which is the small slice. Maybe $50 to $150 a year. Getting married lowers your rate about 8%. Owning a home nudges it down a little. These are real, but you will not marry someone or buy a house to save on insurance. Take them if they apply. Do not build a plan around them. And as always, here's where those numbers come from. Number 12. A defensive driving course saves most drivers $50 to $200 a year, and it lasts about 3 years. The course costs $20 to $100. So you break even in months. A real safe lever, especially if you are over 50 or a new driver. It is this low only because for the average driver the dollar amount is small. Number 11. Raising your deductible from $500 to $1,000 cuts your premium about 9%, roughly $100 to $300 a year. But read this carefully. You did not save that money. You moved it. You now pay $500 more out of pocket the day you have a claim. This only makes sense if you have that $1,000 in savings ready. If you can absorb the higher deductible, take it. If a $500 surprise would hurt, leave it alone. Number 10, and a free one. Paying your 6-month term in full instead of monthly is the real lever here. Up to about 20% off at some carriers. Autopay and going paperless add a little on top. It costs nothing but the cash to pay 6 months up front. Number 9. And if there is a student on your policy, it is big. A B average or better earns 7 to 25% off. $148 to $780 a year for drivers 16 to 25. State Farm goes to 25% at a 3.0 GPA. Allstate accepts the lowest bar in the industry, a 2.7 GPA. If it applies, move it up your personal list. If you have no student driver, skip it entirely. That is the catch with every discount below the top of this ranking. An average is only your average if you qualify. Sourced, like every number in this ranking. Number 8, and the one the ads push hardest, so be skeptical. The apps that track your driving advertise up to 40% off. The reality from the Consumer Federation of America is a median saving of about $120, roughly 10%. Consumer Reports found the top 5 programs averaged closer to $330. But here's what they do not advertise. In one large study, only 31% of enrolled drivers saw their rate go down. 24%, nearly 1 in 4, saw it go up. Telematics rewards one specific driver and quietly punishes another. Drive little, brake gently, stay off the road at night, enroll. Long commute or driving after midnight, that app can raise your rate and take your data for the privilege. Number 8, with an asterisk. Number 7, insurers give quiet discounts for who you are and who you are affiliated with. Military members and their families get pricing about $840 a year below the market at USAA. Teachers, engineers, nurses, alumni groups, big employers, warehouse clubs, all can unlock a group rate you will never see on a public quote. It costs nothing to ask. It is this high because it is real money, but gated. You qualify or you do not. Straight from the source, as always. Number 6, bundling home and auto saves $542 to $646 a year on average. State Farm goes as high as 25%. Genuinely good, and it is why every agent leads with it. Here is the warning the agent will not give you. A bundle is only a deal if your carrier is competitive on both lines. Pair a cheap auto insurer with an overpriced home policy, and the discount just hides that you are overpaying overall. So shop each policy on its own first. Only bundle once you know both prices are actually good on their own. Number 5, and if you barely drive, one of the biggest levers on the whole list. Pay-per-mile charges, a low monthly base, plus a few cents a mile. Drivers under about 7,500 miles a year routinely save 30 to 47%, $1,000 to $2,000. The break-even sits around 10 to 12,000 miles a year. Drive more than that, and traditional insurance wins. So this is number 5 in raw dollars, but only for low-mileage drivers. Commute 15,000 miles a year. Ignore it completely. Number 4. Once your car is old enough, full coverage stops being protection and starts being a bad bet. On a paid-off older car, dropping comprehensive and collision saves around $900 to $1,800 a year. The rule of thumb. If comp and collision cost more than 10% of what your car is worth, you are paying to insure a car the company will barely pay you for. The catch: the car must be paid off, and you need savings to replace it yourself. If you still owe on it, your lender will not let you. If it is yours and it is old, run the 10% rule. Number 3. If your household runs 2 or more cars, putting them on one policy saves the average household $830 a year. Farmers goes as high as 48% off, easy and automatic if it applies. The one honesty note, the same one that trips up every big percentage discount, a bigger advertised discount off a higher base rate can still cost more than a smaller discount from a cheaper insurer, which is exactly why the top 2 levers beat every discount code below them. Number 2, the biggest single factor on the entire list, and almost nobody thinks of it as an insurance move. Drivers with poor credit pay about $749 a year more than drivers with excellent credit for the exact same coverage. That is the average. MoneyGeek puts the worst case over $3,800 a year. Zebra found the bottom credit tier paying more than $4,500 a year above the top. Your record can be spotless, and your rate is still set, in large part, by your credit score. So why is this number 2 and not number 1? 2 reasons. It is slow. Fixing credit takes months, not an afternoon. And 4 states, California, Hawaii, Massachusetts, and Michigan, ban insurers from using it at all. But if you live anywhere else and your credit has room to grow, this is the largest number on the board. It just is not a same-day fix. The receipts is always. And number 1, the lever you can pull this afternoon. For free, no matter who you are. Shop your rate and switch. Drivers who switched saved a median of $461 a year. 41% saved $500 or more. 13%, better than 1 in 8, saved over $1,000. 92% of switchers saved something. In pricier states like Florida and New York, the average switch saves $700 to $900. Here's why this beats credit, beats bundling, beats every app. Insurers use price optimization. They quietly raise the rates of loyal customers precisely because loyal customers do not shop. Your reward for staying is a higher bill. The counter move is simple. Every 6 to 12 months, pull 3 or 4 quotes and make your current insurer earn your business. Biggest lever, fastest lever, and the only one on this list that works for absolutely everyone. That is number 1, and it is free. Now step back. 4 of these 13 levers barely move your bill. Anti-theft gadgets, defensive courses, marriage, and raising your deductible are the ones every ad leads with, and they move the least. Raising your deductible does not even save money. It just delays the bill to the day you crash. The 3 that actually work, shopping around, fixing your credit, and combining your cars, come from how you buy insurance and who you are, not from any discount code. The industry loves the small levers because they keep you from pulling the big one, which is leaving. So here's the honest verdict. If you do one thing today, get 3 fresh quotes and re-shop. Biggest realizable number on the board, and it is free. If you have months, work on your credit, because it silently prices your entire policy. If you run more than 1 car, put them together. Everything else is a bonus. Worth taking when it fits, not worth losing sleep over. The discount codes are the distraction. The buying decision is the money. That is the whole ranking. If it saved you money, the next one runs the numbers on full coverage versus liability only. The exact math your agent will not do for you. It is right here. See you in the next one.